Hi everyone, in this lecture we'll cover the correction of the study case on Excel. So here we have three services, the equipment, we have the equipment, we have installation, and we have the training. So these three services are independent. So here we have because it can be done by many vendors, the installation and the training. So here we have three performance obligations. Now we should allocate the transaction price on the three performance obligations. So as you can see here, the total amount of the three services, 2,070,000 these, and now we should allocate according to the 2 million the transaction price. So here we'll determine this percentage by dividing 2 million by 2,270,000. We have 97%. The same thing, we'll divide 2 million by this 2,070,000, we will have 1%, and 50,000 by 2,070,000, and we'll have 2%, and we should multiply by the transaction price to have the correct allocated transaction price with the total amount of 2 million. Now we'll move to the booking entries on November 1st. As on November the equipment was delivered and the installation was completed, so the payment will be received by the company, $2 million. Then the company should recognize the whole amount of revenue because the equipment was delivered, and also the installation was completed, the 19,000. So this two are completed, and also should the book the unearned service revenue. This is a statement of financial position account credited because the training will not be done. It will be done after the installation. Also, the company should book the cost of the equipment, which is 1.5 million. So by November, the cost of goods sold, which is a P&L account, should be debited, and should credit the inventory by 1.5 million to remove the equipment from the inventory. Now by the end of December, the company should book 2 months of the training because it will be done on November and December. The total amount is 48,309, which should be divided by 6. It will give 8,052. Now it is multiplied by 2 months. The company should book a revenue of 16,104 and should reduce the unearned revenue by this amount. Finally, by December 26, the company should book the remaining amount, which is 30,000 as revenue, and sold the unearned revenue by this amount. So now this amount is 0, and the revenue of 32,205, which will be booked as a training.